So we are on to question number 2 of the December 2017 exam paper. The name of the question is Chicory Company. It says Chicory operates a chain of depots in D-land, supplying and fitting tires and other vehicle parts to lorries, buses and agricultural vehicles. Chicory's objective is to maximize shareholder wealth. The objective is to maximize shareholder wealth. Due to a slowdown in the economy, the performance has been weak. An unsuccessful acquisition has also caused cash flow problems and a write-off goodwill of 24.7 million in the year to 30th June 17. So the problem with this company Chicory has been that when we talk about this company Chicory, the problem that is being faced is that the performance of the company has weakened. Plus what happens is you are being told that in addition to the performance being weakened, there's another aspect to this specific area, and that is that there was an acquisition which has resulted in a huge impact on the cash flow, and then there is a goodwill write-off. There's a goodwill write-off that has actually occurred. Now, let's move a bit forward. Let's discuss further. It says the board has commissioned a benchmarking exercise to help improve Chicory's performance. Exercise will involve comparison of a range of financial and other operational performance indicators against Fennel, a similar business in VLAND. So what happens is the business is planning to get into this benchmarking exercise. And when the business is getting into the benchmarking exercise, they have identified a comparator, and the comparator is going to be a company named Fennel. Now what next is there? The next situation is it says Fennel has agreed to share some recently available performance data with Chicory as they operate in different countries. So you are in D-land, they are in V-land. Reason Fennel was chosen as a benchmark is that as well as supplying and fitting tires and parts to vehicles, a large part involves supplying electricity to charging points to recharge electric cars. Fennel installs and operates the charging points in public places, and users pay Fennel for the electricity they use. Board intends to follow a similar business model as the use of electric cars is increasing in D-land. So there are similarities between you and the other company, but at the same time there are differences also, and you plan to actually follow the footsteps of that company Fennel in order to overcome this specific business segment which is missing in your business right now. Now what next is there? It says that VLAND is growing strongly. VLAND is the country where the Fennel Company is situated. Electric cars used there has increased rapidly in the last 2 years, encouraged by tax incentives for businesses like Fennel to install and operate charging points. So you get the tax incentives if you actually install these and operate the charging points. It says the VLAN government has also underwritten loans taken out by businesses to finance this technology, which has enabled Fennel to borrow funds for the significant capital investment required. Cost of components used in charging points is falling rapidly. The cost of components is reducing rapidly. Capitalization of development costs related to this technology is permitted in VLAN, but not in D-land. So it says in 15, Fennel invested heavily in the IT systems, which significantly improved the performance by increasing the availability of parts in its depots and reducing inventories. It says Chicory uses the average return on average capital employed as its main financial performance indicator, and this is to be benchmarked against Fennel. One board member suggested that it has some disadvantages, and EBITDA could be having advantages as a performance measure over the existing measure of return on capital employed, and should also be used in the benchmarking exercise. You have been given the most recent available financial data for both businesses in Appendix 1, with data for Fennel being converted into dollar from its home currency. So what information do we need to do? What are the things that we need to cover up? One of the requirement is evaluate the relative financial performance of Chicory against Fennel using two financial measures identified in benchmarking exercise, and evaluate the use of the performance measures in this situation, the ROCE and the EBITDA. So what you need to do is that you need to compare the performance of this company Chicory with the Fennel. And once you are going to be comparing the performance of Chicory and Fennel, so you would be using either the ROCE, the return on capital employed, as a basis, or you'd be using the EBITDA, the earning before interest, tax, depreciation allowance, as the basis. So this is what you would be doing. Second is, it says advise Chicory on the problems of using the benchmarking exercise with Fennel as a way to improve performance. So that is also something that you would have to do. The data is being given to us with respect to the benchmark data for the 30th June 17 for 31st December 15. Okay. The assets are being given, the liabilities are being given. At the end of the year, at the beginning of the year, the income statement is also given, and it says the 6 million of the new capital was introduced into Fennel on 31st March 15. Normally, new net investment is spread evenly over the year. It says operating profit is after charging depreciation on non-current assets of 18 million in Chicory and $25 million in Fennel. Now, what I'm going to do is I'm going to start discussing this question, but before that, what I would want you people is I would want you people to calculate ROCE for Chicory. I want you to calculate ROCE for Fennel. Same, I want you to do the calculation of EBITDA for both of them, and then I'm going to start discussing. So first do the calculations, and then I'm going to start discussing along with you people. Yeah, kindly try to do the calculation, please. Let's talk about the computation of the ROCE, and then we are going to move forward. The examiner says that what they do is that they calculate the return on average capital employed. The examiner says they calculate the return on average capital employed. Now what they need to do is that with respect to the ROCE, the formula for the ROCE is operating profit divided by average capital. It's going to be the operating profit divided by the weighted average capital. Now what is going to happen is that sorry, not weighted average capital, or it's average capital. If I talk about Chicory company, the opening capital is the capital which is established as total assets minus current liability. The capital which is established as total asset minus current liability it's going to be what? 140 minus 81. Hence, resultingly, this is going to be 59. The closing capital, which is again total assets minus current liability, is going to be, sorry, this is closing capital. So the opening capital is going to be 138 minus 60. So this makes it 78. Hence what happens is, if I talk about the average capital, the average is going to be 59 plus 78 divided by 2. So resultingly, it's going to be 68.5. How much is it going to be? 68.5. So if we talk about the ROCE, the ROCE is going to be what? The ROCE is going to be the operating profit divided by this capital. So the operating profit is 9.3 divided by 68.5 into 100. So this actually gives you 13.57%. Similarly, if we talk about the other company, the name of that company is Fennel Company. So if I talk about this Fennel Company, let's try to have an understanding. We are being told that their capital for the start of the year was this much. $170, and at the end of the year the capital has been 176. The capital has been 176. So what we are being told is that the new capital of 6 million was introduced on 31st March 15. Normally new investment is spread evenly over the year. So what are we going to do? We are going to say that 170 is available for the first 3 months of the year, because it was introduced on 31st March. Plus 176 is available for the 9 months of the year. So hence resultingly what happens is 176 into 9 divided by 12. So resultingly what happens is this is going to be 174.5. And hence if we talk about the ROCE, this ROCE is going to be what? (26) divided by 174.5 gives you 14.89%. Gives you 14.89%. Now, we have done the ROCE calculation. What was the requirement of the question? The requirement of the question was evaluate the relative financial performance of Chicory against Fennel using 2 financial performance measures identified in benchmarking, and evaluate their use as a performance measure in this situation. So first of all, if we have to evaluate their use as a performance measure, let me talk about few things, that how exactly are we going to be answering the question. We would say the Chicory's ROCE is lower than that of Fennel, indicating that Fennel is better performing entity. So what do we have? We have Chicory's ROCE is lower than that of Fennel, indicating that Fennel is a better performing entity. Now what next is there? The next situation is the ROCE. Next is you need to talk about the advantages, or you need to talk about the disadvantages of ROCE and why and whether it's relevant in the current scenario or not. So if we talk about ROCE, it's actually a relative measure, but ignores the size of investment. Chicory has lower investment as compared to Fennel. So the investment in Chicory is lower as compared to that of Fennel. Now, furthermore, what happens is, this is basically one of the disadvantages of this ROCE, that it ignores the size of the investment. It's a relative measure, so easier to understand and interpret. Yes, it only measures the output, doesn't actually takes into account the input. Further, affected by the accounting policies about the profit and capital. The good thing is, establish from the published data, can be affected by management bias, does not consider cash flows. So these are the few things that you would have to incorporate. Considering that whether this is going to be relevant, so you would say that considering size of the business to be different and the type of assets, there's an intangible in Fennel. The accounting policy would have a key role in ROC, and hence it is not appropriate. So that's what you're going to be talking about with respect to RSE. You'll be discussing about in general the workings of the ROC, and then you'll be talking about the relative advantages and the disadvantages, and then you would comment whether it is relevant for this company or not. I can guide you with one more thing, which is that when you are going to be measuring it, you need to keep this thing in mind that okay, now let's move a bit forward and discuss about this dysfunctional, next thing, which is going to be your earning before interest, tax, depreciation allowance. So if I talk about this EBITDA, this is about the Chicory company. This is about Fennel Company. What do we need to calculate? We need to calculate the earning before interest, tax, depreciation and amortization. How would you do that? You'd say the operating profit, because the operating profit is already profit before interest and tax. And then what happens is, the depreciation of 18 million here, 25 million here. The depreciation of 18 million, the depreciation of 25 million. Then what happens is, there is another thing which is basically the goodwill write-off that was discussed in the first paragraph of the question. And that was 24.7 for Chicory. It turns out to be 52. And this turns out to be 51. Now, what is actually going to happen is, now you would actually be commenting on, I repeat, now you would actually be commenting on this EBITDA as a performance measure. So the performance of Chicory is better than Fennel. Now, an absolute measure tells you exact value created. Since it's positive, therefore value is created for shareholders. So you would have to say that since it is positive, the value has been created for the shareholders. With respect to this, advantages of this and the disadvantages. The advantages is approximation of cash, eliminates effect of non-cash measures which are affected by accounting policy, ignores tax and interest which are distribution of profits. So the interest and taxation, the interest is on the capital, the taxation is the things that are beyond the control of the entity. They are the things which are beyond the control of the entity. Another good thing is basically can be established from the published data. It can be established from the published data. With respect to the disadvantages, it's actually an absolute measure, so does not and so makes it difficult to compare businesses of differing sizes. So that's something that you would have to keep in mind. So these are the few things that are going to happen. It's a better measure as compared to ROCE, as it is more close to estimation of cash, which in turn would mean maximization of shareholder wealth, which is the intended objective of the entity. So this is what you are going to be talking about with respect to this specific question, Chicory. So this is what you would be talking about with respect to this question of Chicory. Yeah, is that okay to all? Yes, no accounting is standard. Not standardized. Okay, you can write as much as you can. So, but generally speaking, this is how you're going to be answering. Yeah, is that okay now? Okay, good enough now. So we are done with this. Now, next part of the question is, it says, advise Chicory Company on the problems of using the benchmarking exercise with Fennel. Advise Chicory on the problems of using the benchmarking exercise with Fennel. And what else is there? As a way to improve the performance. Now try to understand this. What happens is whenever we use a company as a benchmark, so the the objective of benchmarking is that you compare your performance with a competitor, you identify the gaps, you try to fill the gaps and reach the performance level or exceed performance level of a competitor. That's what you have to do. That's something that you have to do. What you need to do is that you need to compare your performance with a competitor. Identify the gaps between your performance and that of the competitor. Try to fill up the gaps. Reach the performance level that is expected. Now, but the problems with respect to this, the problems about benchmarking with Fennel is that the tax incentives are available. Government is supporting business growth. Government is acting as a guarantor for the loans. The accounting treatments are different. Furthermore, the product portfolio includes electric cars, which is not part and parcel of the Chicory. Additionally, the data is around, how old is the data? December and June. 18 months old as compared to data of Chicory use. The performance data shared may lack integrity. And furthermore, what happens is there's further another thing which a student has added up, which is the operational data may not be made available. So resultingly, what happens is, you see, always remember the comparison is for the like with like. If you're gonna compare a like with unlike, then you cannot always get the right answer. You cannot always get the right answer. That's something that's going to happen. Yeah, is this okay to all? Achieve competitive edge. How can Usman, we have been given in the question that the accounting treatment for the intangibles is different. Okay, now, so anyone else having any questions, please, on this? Okay, good enough. So we're done with this question also.